Variable home loan rates start to fall just as the spring selling season kicks off. Chicken might be the number one protein consumed in Australia, but sales are slowing. And digital x-rays find the second biggest diamond ever discovered. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 26th of August, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, ahead of the spring selling season, the country's biggest lender drops some variable interest rates as investors look to build housing more suitable to the singles lifestyles. There's a bit going on.
Yes, plenty in what you just said there. So first off, the Commonwealth Bank announced cuts on Friday, potentially triggering better deals for customers across the sector. It should do anyway. The country's major lender said it would reduce some new customer variable rates by up to 0.35 percentage points, 35 basis points, and fixed rates by up to 70 basis points. It follows several fixed rate cuts by other banks in recent weeks. Now, CommBank didn't change its standard variable rate, but it means CommBank's basic home loan rate will fall from 6.59% to 6.44%. The package home loan rate will go from 6.49% to 6.34%. This is all happening even though the Reserve Bank has made it clear the official benchmark rate isn't going to change this year. Now, we're not here to promote Commonwealth Bank's rate. The point is that when CommBank cuts, it becomes much more competitive out there. And in fact, there are lower rates in the mortgage market than CommBank's rate. According to Canstar, they range from 5.49% to 5.79% across variable and fixed terms. It's certainly good news for anyone looking for a new loan, and maybe a touch frustrating for those of us that already have a variable rate loan that it hasn't been we're not included in it. Some of the buyers of houses over the weekend, though, they should be happy. There are plenty of buyers, in fact, with the national preliminary clearance rate up a touch to 71.4%. More than 2,000 homes went under the hammer over the past week. Melbourne's rate came in at just under 69%. Sydney was almost 75%. Adelaide came in at nearly 80%. Brisbane 67%. And Canberra 57%.
All right. Now, the other thing that I mentioned, Sean, adaptable housing. What's this story about?
Yeah, it's fascinating. Digital nomads and millennials are driving plans by developers and fund managers to build thousands of micro apartments in big cities across Australia. These apartments are typically under 32 square metres and designed to include kitchenettes, small living areas and a bathroom, while whoever's living there, they access shared communal lounges and co-working spaces. This is according to a story in the AFR. Importantly, they can be located close to major CBDs, providing accommodation for those priced out of the traditional apartment market. Hotel developer, operator and fund manager ProInvest Group is sounding out investors for a $500 million raising that will fund an initial pipeline of 2,000 flex apartments, they're calling them. Many of these will be developed out of older hotels or vacant office buildings. The average apartment size would be just 25 square metres, less than half the size of a typical 55 square metre serviced apartment, and equivalent to modern student accommodation. It'll include, though, a kitchenette, toilet and bathroom. All the units will be fully furnished. Now, amenities such as co-working spaces, gyms, communal areas will be included, but it's just a really fascinating way to address the housing crisis.
It's about putting more options into the market, isn't it?
It's a fantastic idea because even if you don't want to buy that, part of the housing crisis at the moment is because of the influx of foreign students. Students are much more likely to take up this option, you would imagine.
Mm-hmm. Yeah, absolutely. Oh, it's fascinating stuff. Local markets. Sean, where did they finish up on Friday?
The S&P ASX 200, it closed flat on Friday. In fact, it was down 3 points to 8,024 points. It is significant that it dropped 3 points rather than was flat because it broke a 10-day streak of positive closes. Only just, but it did. For the week, the bourse was up 0.7%. Wasn't a lot happening on Friday. It was a bit quieter on the earnings front. One interesting result was retailer Accent Group. Its share price tumbled 15% after it reported a 33% drop in net profit, even though sales were higher. Now, the group has more than 800 stores, 35 brands. We know them: Dr. Martens, Hoka, Hype, Athlete's Foot, Platypus, etc. The good news is that total sales for the first 7 weeks of this financial year are actually higher. Around 2/3 of companies have now reported half-year June earnings. 36% of results have beaten expectations, which is slightly lower than normal. but there have also been fewer companies missing expectations. Around 55% of companies are announcing higher earnings than a year ago, according to AMP, while 59% are boosting dividends. Those numbers are in line with historical averages. The ASX 200 is expected to open higher today on the back of a strong result on Wall Street over the weekend.
Sean, after the show, you have an interview with Roger Montgomery, and we've talked to Roger a few times on this podcast. I reckon this would be one of his best interviews that he has done with you.
Yeah, so what I like about it, we pick 3 or 4 companies and we go into depth about what their results have shown. And it's really fascinating because he unpacks what's going on in the companies, and there's a couple of medical companies, a consumer discretionary company, and tells us why the results are better or worse than expected. And I mean, Breville's a really great example where he talks us through the actual business model of Breville and why, what some analysts were saying 6 months ago was just totally wrong, and why it's doing so well now. So definitely well worth a listen.
Yeah, sure is. It is coming up after the show. Stick around for that one. In the meantime, Sean, what's happened in international markets over the weekend?
Plenty. Federal Reserve Chair Jerome Powell made it pretty clear interest rates in the US are coming down soon, saying the Fed intends to act to stave off further weakening in the US labour market. In a speech over the weekend, Mr. Powell said the time had come to adjust policy and the Fed wasn't seeking and wouldn't welcome any further cooling in the labour market. Bond traders have already priced in a rate cut next month and expect more later in the year. Wall Street jumped in response, led by the tech-heavy Nasdaq, which closed up 1.5%. All that news is putting pressure on the US dollar, pushing up other currencies such as the Aussie dollar, which is trading near 68 US cents. Of course, the very bad news on the Aussie dollar is against Thai baht, one of my favourite currencies at the moment. It's a little weaker over the past few weeks.
Why would that be one of your favourite currencies at the moment, Sean?
Well, as it turns out, in the next couple of days, we're taking a little trip to Thailand. Holiday, Michael, holiday. And it was trading much higher about 2 months ago than what it is now. Anyway.
Makes sense. As soon as you book your holiday, the currency crashes. Sean, we'll be back in a moment with the rest of the day's business news. Sean, ANZ Bank has been hit with an extra $250 million capital charge after the prudential regulator identified persistent concerns about its risk management stemming from an escalating bond trading scandal.
It means ANZ has to hold an extra $750 million in total as a type of insurance, money that can only be deployed in limited ways. That hinders the bank's ability to make a profit. The bottom line doesn't get hurt that much, but it's a really bad look for ANZ. The Australian Prudential Regulation Authority penalty comes as the bank faces an investigation into alleged market manipulation of the government bond rate after it admitted to providing incorrect information to the government's debt agency. An internal investigation into the matter has already resulted in one trader being dismissed and 2 others being suspended. APRA said it had not seen improvements in ANZ's risk management since imposing the initial $500 million capital charge in May 2019, which had been designed to address major flaws in its risk culture. 2019, that's 5 years ago, and the APRA is saying it hasn't seen any improvement. That is not a good look.
No, it's not. The corporate regulator, Sean, has revealed its targets for the year ahead, warning it will pursue misconduct and poor service across superannuation and financial services.
The Australian Securities and Investments Commission warned it was assembling new teams to tackle concerns around private markets and emerging climate reporting requirements. ASIC said its priorities spanned 5 key areas, including improving consumer outcomes, addressing financial systems risks from climate change, delivering better retirement outcomes for super fund members, looking to scrutinise digital and data resilience and safety, and pushing for consistency and transparency across public and private markets. ASIC noted that over the coming year, it would look at Australia's financial markets, both listed and unlisted, as well as large companies and super funds.
Ingham's, the producer of chicken and turkey for consumption, expects volumes will fall in the coming months, reflecting cost of living pressures. That triggered a 20% slump in its share price on Friday.
The group reported a pretty robust 2024 financial year, underlying earnings up 13%, the best ever result, according to Chief Executive Andrew Reeves. But the outlook isn't quite as positive. Now, Ingham's supplies the majority of major retailers and quick service restaurants in the country, a major player, probably the major player. Do you know, Michael, each year more than 700 million chickens are produced for meat in Australia. And at any one time, there are 100 million chickens alive, meaning 4 chickens to every person.
It did sound like that was the beginning of a year 7 maths problem.
Yes.
You put 700 million chickens, 100 million chickens alive, and the train's travelling at 20 kilometres an hour.
Chicken accounts for about half of all the meat we consume in Australia.
I
think that's fascinating. I must say, it's got nothing to do with the story, but I just kind of went down a rabbit hole on that one. It was kind of interesting. Yeah. Anyway.
A chicken hole.
A chicken hole. Oh, is there such a thing? Let's move on.
We might leave chicken holes out of this one, Sean.
Ingham's hopes to benefit from lower costs going forward, even if demand is soft, including more automated processes for, and I quote, leg deboning and water jet cutters. Let's move on.
Yep. Sean, there's a bit going on in healthcare. Telix Pharmaceuticals has posted a maiden half-year profit after a big jump in sales last financial year.
Telix products use targeted radiation to image and help treat cancer. Its share price is up more than 1,300% in the past 5 years. Biotech Mayne Pharma doubled sales last financial year, although it posted a statutory loss of $169 million on the back of asset impairments and legal costs. Fisher & Paykel lifted its financial 2025 profit guidance, sending its share price up 11%. And worth a mention is Clarity Pharmaceuticals, the clinical stage radiopharmaceutical company, is developing products to help improve treatment outcomes for cancer sufferers. Its share price hit a record high on Friday.
The Northern Territory has a new chief minister after Leo Finocchiaro, the leader of the country Liberal Party, won the territory's poll on Saturday.
It was the first time a Conservative government anywhere in the country has ousted a Labor government since 2018. Ms Finocchiaro said law and order is her number one priority. She'll address youth crime in places like Alice Springs by backing in police and holding parents responsible.
Okay, turning to international news now, and Hezbollah launched hundreds of rockets and drones against Israel over the weekend in retaliation for the assassination of a senior commander in Beirut last month.
Israeli jets hit targets in Lebanon shortly before the strikes as the military assessed that Hezbollah was preparing to begin the barrage. Hezbollah said it had launched more than 320 rockets towards Israel and hit 11 military targets, according to Reuters. It said the barrage had completed the first phase of its response to the assassination of Fuad Shukr, a senior commander in Beirut, but that the full response would take some time. Defense Minister Yoav Gallant said Israel would do whatever's necessary to defend itself.
I mentioned this next one at the top of the show, Sean. The world's second largest diamond has been found in Botswana. It is a 2,492 carat stone, discovered by Canadian mining company Lucara Diamond. That is incredible.
Yeah, it's the biggest known gem quality find after the Cullinan diamond, discovered more than a century ago, which was cut up and incorporated into the British Crown Jewels. It is about 2/3, so this is the new stone, about 2/3 the size of a Coke can, and was found using X-ray transmission technology. The find has been called the most significant this century, according to a story in the Financial Times. The stone is estimated to be worth more than $40 million US, about 60 million Aussie. The company's share price after the announcement jumped by about 40%, and Lucara's chief executive vowed to use the stone to boost the profile of the diamond sector in Botswana. While factory-made diamonds and the downturn in luxury spending have knocked the rough diamond market, giant discoveries like this remain an important source, not just of income, but marketing power as well. Mining of the precious gems make up about a quarter of Botswana's GDP, so very good news for that country.
That is quite amazing. Everything about that story is amazing. The fact that they found one stone and the company's share price went up by 40%. Big stone, of course. But the idea of using an X-ray to find it, do you just kind of have this image of the X-ray just showing this like neatly cut little diamond?
Actually, it's worth looking at. Looking up. There's some great photos and some great video of I think it's the president of Botswana holding this diamond, and it is massive. It's kind of like something you'd see out of a movie.
You know it's an impressive diamond when you have to use a Coke can as the reference.
Yes, yeah.
Normally we're thinking kind of things in relation to your kind of little fingernail, that kind of thing. But no,
it is
we
massive.
are talking about a Coke can.
Yep.
All right, last one, an update really on an earlier story that we've talked about in recent weeks. Elon Musk's SpaceX will use one of its capsules to bring home astronauts stuck at the International Space Station next year.
Yes, Boeing's flawed Starliner craft will return without people on board early next month, the US Space Agency said over the weekend. Now, according to Bloomberg, the contingency plan means that NASA astronauts Barry Wilmore, Butch Wilmore, and Sunita Williams, Sunny Williams they call her, will hitch a ride home on SpaceX's Crew Dragon capsule during a 6-month mission called Crew 9, slated to launch in late September. That would put them back on US soil in February, months later than they had originally planned to come home.
All right, up next is Fear and Greed, the week ahead, normally featuring resident economist Stephen Koukoulas. We have a special guest for the next few weeks, EY Chief Economist Sherelle Murphy.
Sure do. We talked to Sherelle about it's a big week coming up. Probably nothing more important than the monthly CPI figures, monthly inflation figures. We're all sweating on those a fair bit. We talked to Sherelle about that and how she reads the economy. It's interesting to talk to Sherelle and just a bit of a different take to Stephen, which always makes it kind of interesting.
Yeah, it certainly does. Well worth a listen. It's coming up next. And after that, your chat with Roger Montgomery, Chief Investment Officer at Montgomery Investment Management.
Yeah, all about earnings season. And we look at a few companies. I think we take 4 companies, have a chat about exactly what's going on, a bit of a deep dive into them. Well worth a listen.
Yeah, indeed. So a couple of good things to listen to coming up on the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you can sign up for the free weekly newsletter, which comes out every Wednesday. So do it today and then you don't have to think about it ever again. Thank you very much, Sean.
Thank you, Michael.
It is Monday, the 26th of August, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.